Okay, so for this short video, I'm going to be explaining how to find equilibrium in under 1 minute. So the first thing we're looking for is our range. So our range is going to be a swing high to a swing low, or a swing low to a swing high. So it's going to look something like this. Here's our low, here's our high, and here we are back inside the range. So what is equilibrium? Equilibrium is a Fibonacci retracement tool. So as you can see right here, I have my Fibonacci retracement. I'm going to be grabbing the low of the range to the high of the range, and I'm getting the midpoint, which is the 0.5, also known as equilibrium of the range. So equilibrium essentially is a form of liquidity. Once price taps into equilibrium, we can tend to have a potential bullish or bearish reaction. Let me show you the bearish form. So the bearish form is when we create our high, our low, and then we come back into the range. So we've got our swing range right here, swing high to swing low, and just like that. Essentially what you're going to be looking for is a potential selling opportunity off equilibrium right here. I know a lot of people that trade strictly based off equilibrium. They target one-to-ones as soon as price taps back into the midpoint of the range. Okay, so right here I have my demonstration. So as you can see, we have our swing high and our swing low, which is from this low to this high right here. And then we get our key reaction off equilibrium right here, which is the midpoint, the 0.5 of the range. And then we get our displacement higher. So this could have been our potential entry point. Entry off the midpoint of the range, targeting higher price, catching a 1 to 1.5 if you use your stop loss like this. However, I personally do not trade equilibrium like this. I trade equilibrium in my model. So what I look for is a potential fair value gap aligning with equilibrium. So as you can see right here, we have our gap in the market. So this is going to be our bullish fair value gap. Notice what price does as soon as it taps into the 50% of the Fibonacci retracement tool. We then get our key reaction, which is right here, and we could have caught a long position just off that.